Now, let's talk about how these things affect your pocket, what you should be doing, and where you should be positioning yourself. Hi, my name is Ola, and let's get to it. Should you be buying gold? Is it too late? Where should you be investing your money in Nigeria? What are the things that you should do? Let's talk about it. Very, very important things to discuss. So, the first thing that we're going to talk about is on the global scene. What's happening on the global scene? The first thing is that, sorry, I'm reading through. Yes, gold. Gold is the first news on the global scene. What is happening? Gold crossed the 5K mark. Now, the thing that is wild about this is the simple fact that gold was actually about 2,800 at this time last year. What that means is that if you bought gold last year, you would be smiling right now. But the real question is, should you still buy at this level? And then I'll also talk about where and how you can buy if you don't know already. So I'll give you 5 reasons while we're on this live session. But if you are on my email list, my Substack email list, then you need to go and read the newsletter we're going out this weekend because I'll be sharing 10 reasons and 5 things to consider before you jump in. So check the link in the description and obviously say hi. I see some people are online. But subscribe to my newsletter if you haven't already. So, 5 reasons. The first one is that, except if you are a trader who is all about buying and selling, like it moves from 5K to 5K, 5,100, and you sell, right? Except if you're a trader, then most people don't buy gold to flip it next week or the day after. They buy it because it's a store of value, it's a safety net for everyone because systems are broken, because history repeats itself. That's why people buy gold. So, should you buy at 5K? The question is, do you think it's going to come down to 1K? And what's going to bring you down there? If you don't, then yeah. Then the second thing is that it's at an all-time high, yes, but it doesn't mean that it can't go higher. Like I said, last year it was at 2829 at this time. When it crossed 3K, it was all-time high. When it crossed 4K, it was all-time high. But is it still going up? Yes. So at 4K, people would have thought, oh, let me not jump in because it's too high. But are the things that are making people buy still in place? If they are, then it's not a case of an all-time high. It's a case of what are the drivers, and if these drivers are still in place, then perhaps we should continue buying. The third thing is that central banks are buying aggressively. Like if you missed last week's session, last week we talked about Zimbabwe and how their inflation had entered single digits. And one of the things that the government did was to back their currency with gold. What that means is that apart, and that's just Zimbabwe, and it worked. It actually stabilized their currency. Now, stabilize their prices, right? Not just the currency, but the pricing of goods and services to a point where inflation became single digits. So it's not just Zimbabwe that is buying. Central banks are steadily buying gold as a reserve currency. So if the big boys are buying, what do you think? Then the fourth thing is that gold usually does well when debt sustainability is a problem. What is debt sustainability? It's how much debt does a country have compared to its revenue. When it is a problem, people generally tend to turn to gold. And we know that debt sustainability is a global pandemic right now. So, what are you waiting for? And the final thing, gold thrives when uncertainty is heightened. Like you guys, I don't need to talk about it. So the question is not just is at 5K and it's at an all-time high, so I shouldn't buy. The question is, what role is gold playing in my portfolio? If gold is like a stabilizing factor in my portfolio, then whether it's at 5K or the forecast of, I think, Standard Chartered that is saying is going to get to 6,300, whatever price it is, you should have gold in your portfolio. So if you don't have already, then how do you get it into your portfolio? Now, the first thing I would say on the back of that is join the Money With Club. Link in bio. But yo, why do I say that? Because we did have a session last year on how to actually invest in gold. The little things, even if you're buying jewelry as gold, there's some little tips to know how to buy the proper specifications, one. And then there are some little things like it's having extra things that are not gold, and then weighing that so that if you need to sell for any reason, you don't lose value. Things like that. There's some technicality around it. So it's not just, oh, go and buy gold. I have jewelry, therefore I have gold. No. There are gold bars, there are gold coins, there are other ways. If you are in US, UK, no, US, Canada, I know for sure. You can go into Walmart and buy a gold coin, right? There are online apps. Even in Nigeria, if you walk into any proper gold merchant, they would sell gold coins. They can sell gold coins, mini gold bars, different weights. So yes, you can buy gold. You can also keep them. They have bullion services, right, where you can keep them. It doesn't have to be in your house, but it is a store of value. It's a very, very valid store of value. And of course, if you would like me to do like an extensive video on different places to buy gold and what to look out for when buying gold, then drop it in the comment section. I would look at it and decide based on the numbers. And of course, this is a live session, so please say hi. I see some people online, so please say hi. Let me know and all. Then the next news out of the global scene is that Elon Musk Elon Musk SpaceX applies to launch 1 million satellites to power AI. For me, I think one of the things that I would like to highlight here is this: AI is here to stay in whatever version, format, whatever it is here to stay. And so, for you as a budding investor, my question to you is one, how are you using AI to optimize yourself? Because if there are two people who are intelligent and one person is using artificial intelligence to optimize their delivery and another person is going manual, there will be a difference. There will be a difference at the minimum in time of execution and time of delivery. That's one. Another thing also is, how are you investing in artificial intelligence? Think of the people. So you know the way life has gone into community, there's a lot of social connection, there's a lot of digital connection. Think of the people that invested in Facebook 10 years ago and where their stock prices are right now. Think of the people that invested in Microsoft donkey years ago. Think of where their valuation will be right now. Now we can see that AI is the thing. We went through that whole oil energy, we went through the whole banking system. We can see that AI is the next thing. How are you positioning for it? What part of your portfolio is reflecting that? At the minimum, a lot of the big boys, when I say big boys, I mean the Amazons, the Googles, the Microsofts, they are investing in AI plays, right? So access, so investing in any of those gives you an opportunity to access or to benefit from the AI boom when it eventually happens. It's just taking off right now. So these are things that you see and tell you that if people are investing heavy, then it's somewhat of the future. Then we're going into African news, right? The African Growth and Opportunities Act is what we're going to focus on. The first African news is that Trump signs a 1 year extension. Now, the thing about it is that it actually expired in September 2025. And we talked about it here because the US government went quiet on it and it remained in a lapse state for months. And then companies that were impacted. So, understand what it is. Let me even give a background. It's an act that empowers or that permits African exporters to export to the US tariff free, right? So imagine 2025 that was all about tariffs. And then you had the Africa Growth and Opportunities Act that was covering you. And then it expired, and then the government goes silent in a time and a season when tariffs were just jumping up in the air, right? So a lot of exporters were impacted. A lot of exporters for that period had to pay the taxes that were due, right? But what happened is that the US government, President Trump signed a 1 year extension that will end in December 2026. And the idea is that people have time to breathe. One of the things that was agreed on was that in this 1 year, that countries should actually restructure the act to align with America first. Right? But I mean, in the midst of everything, I think it's a breather for the exporters that were impacted by it. In terms of countries that really, really benefited from it, one of the countries that I know, Lesotho, I think Kenya, a lot of fabric textiles were exported to America for free. And so this whole period where they had to pay taxes, they will pay the tax. Oh, they're going to get a refund for the period that for what they've paid from September till date. So that's like a breather, a temporary breather, right? But for those countries, what has happened is that, okay, we have to start rethinking our sales strategy. We have to start rethinking our pricing strategy and our profitability strategy, right? And we have to start thinking about what thing can I really export that I have economy of scale for, not just an act that is helping me stay cheap, right? For a country like Nigeria, one of the major things that we exported under the AGOA agreement was oil. And then now that the US produces a lot of shale oil, our use in Nigeria plummeted a whole lot, right? So for Nigeria, it's more about agricultural imports, agricultural exports, right? And then now that we are talking about EVs, perhaps that could be something that we would export there. But I think South Africa is highly impacted because they really relied on that act to ship cars to America duty free. And so the fact is that a lot of a lot of countries are impacted by it. It's good, it's a breather. However, in terms of long term, use this breather period to recalibrate and see where your business will come from as an African nation. Also consider the Africa Free Trade as a free Africa Continental Free Trade Agreement and how you might want to switch your markets in that direction. Now, for you as an investor, because I always think of these things, we can't do everything. I can't be a manufacturer of textiles and a manufacturer of cars at the same time, but I can invest, right? So the question is, what can you invest in? That what can you invest in that would start trading amongst amongst Africans? How do you reposition your BMW production to deliver or to supply to African countries as against exporting to America when Nigeria is importing from America? Do you understand? So these are the kind of things that we need to consider as a nation, as a continent, actually, not as a nation. But for you as an investor, where can you plug in? How do you propose? Where is your leg going to be? Yeah, that's the next thing. Then the second news out of Africa is that African multilateral institutions launch early warning system to curb sovereign debt crisis, debt distress. Now, I love this because for us, we saw the Ghana issue. If you don't know, Ghana defaulted at a point, but the fact was that it didn't just happen. Like it actually didn't just happen for any individual that lost money in that situation. The warning signs were there, but a lot of individuals got burnt because they didn't understand what they were seeing and they didn't realize the weight or the depth of the risk that was in front of them, right? So what are they saying? They have launched a warning system that will let you know that okay, debt in this country is an issue right now. We need to recalibrate. What does this do? If all the countries in Africa plug into it and align, then there will be some stopgap measures, meaning that once you hit this, then you need to trigger this, then you need to do that. And then all round, our risk profiling reduces. What does that mean for you? If you are someone that is raising financing that you're an African raising finances from the global market, you will know that there's a risk profile, a risk premium on Africa generally. So things like this are the structures that can be put in place, or that when put in place reduces our risk profiling and then the risk premium that they put on us. What do I mean? If you're going to lend to a European country, let me say Spanish business at 5%, they'll be lending to a Nigerian business that is more viable at double digit dollars, 10, 11%. It's that risk premium that we need to find a way to de-risk. And these are the kind of structures that help that. Does that make sense? Yes. And then finally, Nigeria news. Nigeria is set to become Africa's first electric vehicle manufacturing country. Yo, yo, yo. I saw this and I smiled. But what came to my mind on a very serious note? I know that for Nigerians, we tend to do like roll our eyes a lot. But what came to my mind was Egypt. I talked about it like 2, 3 weeks ago, where Egypt is now going to be putting tariffs on or a tax on Egyptians that buy foreign produced phones. Now, it might seem like why would they do that? Makes no sense. So if I'm an Egyptian, I'm coming to the country, I will have to pay like a tax on a foreign bought phone that I bought with my money. Yes. Why? Because what they did was that they created a system where Egypt now produces 20,000 phones annually, if I'm not wrong. Is it 20,000, 20 million, 200,000? But long and short, they now steady produce phones locally. They invited three or four phone manufacturing companies and they have taken over. Like, and so they got to that point where production is meeting demand. And at this point, if you are an Egyptian that is buying a foreign used phone, then you need to pay something on it, right? And what does that do? It strengthens the market for the locally produced phones, right? It strengthens the business of the people that will service those phones for the stores that would sell. You know, there's a whole value chain around it, and then there's a whole economy around it. So when I saw this, I smiled because if we're able to pull this off, it would really be good. It would really be good. However, things don't just happen like that, right? The manufacturing process requires a lot of power, which is something that we don't really have much of right now in the country. That's one. The charging of the vehicles requires a lot of power too, which we are still struggling for as a nation. So I think power is one thing that if we were able to fix, this will be a game changer. Why? Because it will also reduce the pressure. Imagine if there were plenty charging stations, there was power to charge them, and then our public transport system was no longer dependent on fuel, such that if you say you're an EV manufacturing firm and the government requires that the first type of products or type of vehicles you manufacture are mass transit vehicles, right? And then your transport system is now not dependent on oil prices and fuel prices. Think of the stability that it will bring. Just think about it. So, as much as we might do YIMO, these are actually very, very forward looking solutions that, if implemented and implemented at scale, will change the game in a lot of ways. So all this one where we are struggling with transportation, where staff are like, oh, a single amount of my salary is going into transport, a single amount of money is being spent every week on fuel, right? These are the little things, little announcements that can change it for you. How do you plug into the ecosystem? That's the way I think. Like, you always have to think as an investor, how do I plug into this ecosystem? What are the things? What are the support systems? If I am not in EV manufacturing in any way, shape, or form, but what system I mean, the way they are filling stations, can there be public charging stations? Can we have that? Is there a license? Should we go and look for these things? What does it take? You understand? That's how to think, right? And then the final news is that central bank doubles down on tightening, sterilizes 15 trillion in 2020, in January 2026. What does that really mean? Simple English. That's really what I wanted to explain here. So, um, we had this whole thing around inflation and what the numbers actually were. And the central bank is trying to manage inflation, trying to keep FX stable, which I think they're doing a good job of. And then inflation, which is prices rising, is something that they're really trying to curb on. And one of the things that makes inflation spike, and even FX in Nigeria, in all sincerity, is when there's a lot of liquidity in the interbank system. So what the central bank does is that they mop up. It's as simple as that. Now, if there is less cash, and how do they mop up? They mop up by selling securities, right? When they sell, a bank will have to give them cash to own the security, and then cash leaves the system, and everywhere is tighter. That's literally how it works. It's not anything above your head, right? So the central bank is tightening. They're mopping up. What does that mean? It means that interest rates are either going to go up or they're going to stay where they are. However, as they are saying that the central bank mopped up in January, come this February, just this week that just passed, right? The DMO sold treasury bills and the rates dropped because demand was a lot, right? And so the 1 year went down from, was it 16, 17? No, 17, 18 to 16, right? And then 18, 182 days, 16 levels and all that, right? But the major demand was on the 1 year bill. It was 200% oversubscribed. What does that tell you? That while on one side, central bank is trying to mop up to manage interest rates, the market itself is also saying that I want to buy. And when there's a lot of demand, it pulls it down. Now, for you as an investor, what should you be doing? One of the things I've told people, and we talked about it, we had our 1 year forecast, our 2026 forecast, like yields will come down, and this is what we are seeing. But it's going to be like this, right? If you're not someone that is going to be watching the market every day, go and lock up your long term as long as you can. Lock it up and just go and rest. Why? Because in this you will see that it's going down, it's going down, but it's be doing up and down, but it's be going in a certain direction. Why? Because if inflation, for example, has come down, if central bank has signaled with NPR that rates should be cut, somehow or the other markets will follow until something shocks and spikes it up. But until we see that shock, this is going to be the trajectory. I trust this was useful. I need you guys to follow me on socials, Ola Oladele and the Money Week Club on all social media handles, right? And trust that you understand that you can't outsource your health and your finances. You always have to engage. No one can go to the gym on your behalf and you will be fit. Nobody can eat vegetables on your behalf and you'll be healthy. It's the same way you can't outsource your health. You cannot outsource your finances. So you need to engage. See you next week.